Welcome to the Spooky Express Final Thoughts podcast, where we talk sports, period.
Now it's time for my final thoughts. Let me first state I am not a financial advisor, and you need to invest at your own risk. Now that I said that, I've been asked recently more and more about what is blockchain, what is Bitcoin, and all this talk about cryptocurrency. So let me digress a little from our sports talk and mention a few things on another sort of gambling and investment, Bitcoin, altcoins, and cryptocurrency. Listen, if you started investing in cryptocurrency in October 2017, or thinking of starting to invest now or soon, you may have heard a lot of people that had big things happen, like buying Ethereum at $10 or Bitcoin at $500. Then you look at your portfolio and want to get in on this gravy train and say, when am I going to get my big winner? Well, there are a couple ways of thinking about all this. For most of you, you will probably be deciding the bigger coins are just now too expensive and you missed the boat. So you'll think of buying the smaller coins, the penny stocks, the coins that are not expensive, thinking it'll be a better chance of a big return. I want to emphatically say you will be wrong. First of all, I strongly feel what will happen is over the next 12 months, you are going to see the top 20, 25 coins separate themselves from everybody else, and the top coins are going to win big, and the rest are not. One of the things that messes with people's minds is that the top coins are going to produce the most results in the next year or two when you're looking at the smaller coins to make the jump. Just because the price is so high on Bitcoin and some of the top coins, that doesn't mean it won't keep going. Please check out coinmarketcap.com and you will see specifically what I'm talking about. Many of the coin market, the crypto community world, such as myself, may be driving up the smaller coins, but when all this institutional money comes in, they will all be absorbed in the top 10% of the coins. So the bigger coins will start showing even more returns. Okay, if you have not heard Coinbase, they just launched a storage solution for institutions with at least $10 million in cryptocurrency holdings. Listen, people, there is over $10 billion in institutional money on the sidelines, awaiting custodial and other solutions right now so they can move those funds into the currency market. With all the eye-popping returns, it will be hard for any fund manager to ignore. Think about all these fund managers, banks, people with a ton of money. Where are they going to put their money? In the big market coins. They are still peanuts to them at the value right now. When you invest $1 billion at a time, what do you think will start driving all the growth in the next couple of years? These big coins now are not big with these big market companies. Again, check out CoinMarketCap and you'll see the top coins. Do some research, ask some questions, and watch these investments take off in the next couple of years. It's better than betting any sports future or thinking who's going to win next year's Super Bowl. Okay, so now you have myself and everyone talking of blockchain, Bitcoin by now. Whether you've been tentatively watching the Bitcoin value soar, reading up on the boom of digital currency, taking notes, these have become words in our vocabulary. But what exactly is blockchain? And beyond investing a few $1,000s in digital currency, how else will it impact your life? Okay, not sports, but let me explain. Described by many as the new internet, blockchain is a digital technology that is becoming essential to both business and politics and will soon disrupt every industry imaginable. So how does it impact you? And how does it impact me? And why the heck am I even talking about this on a sports betting website? Okay, first of all, what exactly is blockchain? Now, listen, I'm not that smart, but let me try to explain. The blockchain is an incorruptible digital ledger of economic transactions that can be programmed to record not just financial transactions, but virtually everything of value. Okay, what am I trying to say? Blockchain is secure. It's trustless and decentralized. All records on the blockchain are unable to be changed because they are shared by all participating parties on their own computers. Blockchain is distributed among many people and records transactions that everyone can see and verify. It is essentially a chain of computers that all must agree on a transaction. Okay, so just like any technology, your car, the internet, a microwave, we don't need to understand how blockchain works to use it, but perhaps the simplest way to think about it is by using a spreadsheet example. Okay, remember the days when Microsoft Excel dominated the offices? You would prepare a spreadsheet, mail it to the next person to check and edit it, wait for it to come back, update it. While you could have potentially thousands of the same document available, you could not have thousands of people editing it at once. That led to documents being duplicated, different versions being created, email threads, and confusion. So Google Docs removed that problem by allowing several people to work on the same document at once, like a shared ledger visible to two or more parties in different location. But where Google Docs limitations lie is the distribution of the document. Blockchain steps up by allowing everyone in the world to access the same information at the same time. So instead of passing documents back and forth, losing versions and causing chaos, blockchain is updated and available at all times. So how is blockchain changing business worldwide? If the ramifications of such technology haven't become clear yet, just imagine the amount of legal documents that could be managed with blockchain. We no longer will need passports, birth certificates, or any traditional hard copies. Talk about going green. We'll soon have digital passports that relate to a unique private key. So the scary and inefficient way of carrying and risking or losing my passport during international travel will be a thing of the past. And consider the banking industry. If you had all your money in one bank and that bank shut down one day, all your funds would be lost because they were centralized in that one bank. Now imagine blockchain technology. If your records were distributed across several accounts, your account would be safe because all the participating parties have the same information. Decentralization is a major part of blockchain technology. No transactions can be lost or manipulated, and no data can be located in a single location. So, okay, anytime trust is centrally located, it has a single point of failure. The blockchain allows that same critical information to be stored on many computers all over the world, ensuring it is a tamper-proof database. With blockchain, any changes that happen anywhere happen on the entire network. That means that as far as Bitcoin and other digital currencies are concerned, transactions are almost simultaneous and happen in real time. Now transfer this to all types of record keeping, from land registry to immigration. Blockchain is going to be essential to politics because it can provide a way to increase voter participation and reduce voter fraud. Can you hear me now? Every voter would have a unique private key that they could use to vote in an election. This way, voters couldn't vote twice, and the inefficient way of hand counting ballots would be eliminated. Okay, so why businesses will eventually need blockchain? Okay, let me explain that the best I can. Businesses will need blockchain for more efficient transactions, transparency, and most importantly, security. They no longer need to worry about data getting lost because blockchain self-audits itself every 10 minutes, which is called a block. So it can never be corrupted or altered, or every record is public. Blockchain technology will disrupt many businesses similar to how the internet has disrupted entire industries. Yes, it's the internet, it's the wheel, it's the cell phone, it's the airplane, it's blockchain technology. So blockchain is essential to businesses because it is a more efficient way of keeping records. It significantly reduces the risk of fraud because one party in one transaction can't change their own records without confirming the change with every other participating party. Over the next few years, we'll begin to see blockchain stamp its footprint across all areas of our lives, allowing us to do things faster, cheaper, and more securely. Forget about focusing on digital coins. Blockchain is going to revitalize your company and my company worldwide. Okay, so while Bitcoin investing can be intimidating for everyone, just getting their feet wet, I'm just going to throw out a few several tips that newbies can use to maximize their chances of success. Okay, here are 5 quick tips that are probably common sense, which is not always that common. 1, do your homework, people. First and foremost, if you're getting started with Bitcoin, you need to do your homework. The more you understand, the better off you'll be. Find a trusted person, resource that you can engage with to ask questions in order to understand the nuances of your investment in a safe environment. 2, proceed with caution. Come on, risk is inherent to investment. And everyone should keep in mind that with all this digital currency in very early stages of development when compared to similar assets like the stock or bond markets, don't invest money you can't afford to lose. Start small, invest a small portion of your capital, don't chase Bitcoin prices, decide on an entry point and stick with it. With Bitcoin, you're almost always right in terms of a foreseeable price action, meaning it's all going to go up. It's your timing that might be off. So be patient, let the Bitcoin price come to you, try and refrain from buying all your Bitcoin all at once. 3, diversify, diversify, diversify effectively. Over the last several years, Bitcoin has produced very impressive gains. And the radio, TV, media have all developed a steady stream of stories about all these Bitcoin millionaires. While all these stories might tempt you and me to put all our money in Bitcoin, keep in mind that no investment professional would advise any individual to put all their eggs in one basket. So when you create a portfolio, you should consider other altcoins, more traditional assets such as stocks and bonds or both. So basically, diversify. The basic idea behind diversification is creating a portfolio where a decline in one component will correspond with an equal gain in another, i.e. real estate goes down, gold goes up. For example, let's say an investor has a simple portfolio consisting of equal amounts of Bitcoin, Ethereum, Litecoin, Dash, and Bitcoin Cash. If one digital currency falls 10%, then ideally another digital asset will rise by the same amount. Okay, 4, keep your coins in a wallet. Huh? What I'm saying is, well, exchanges are a great place to purchase digital currencies. They're not the best place to hold such assets. Don't store coins on an exchange. In Bitcoin short history, many exchanges have gotten hacked. So it's fine to buy an exchange like Coinbase, which I recommend, but then move your coins into a wallet like KeepKey or Trezor, both available right on Amazon. Just like you keep some cash in your wallet, some in your bank account, and perhaps the really valuable stuff in a safe, you need to manage digital currencies in the same way. And 5, prepare for volatility. The digital currency markets are friggin' volatile, and there are several strategies that everyone can use to manage the inevitable price fluctuations. Buy and hold is what I recommend, and has been advocated by a great many, including the old man, legendary investor Warren Buffett. Buy and forget is the right strategy for many of us. Good luck and happy holidays. Those are my final thoughts.
You've been listening to the Spooky Express Final Thoughts podcast. For more sports, you can find us at spookyexpress.com. Tweet us at Spooky Express or Facebook us at facebook.com/SpookyExpress.